Good morning. Today we discuss the first Indian economy, second the monetary policy, after that the fourth largest bank of Indian economy, that is Canara Bank, and next how the banking sectors are involved with along with the different policies issued by the central government. So first is the about Indian economy. India is the fifth developed economy. The first one is the US economy, then comes the China's, Germany, Japan, and fifth one is the Indian economy. So as per the record, right now the Human Development Index is zero point 0.6 and Indian rank is the 134 out of 193 countries. And employment rate is the 46.92 and the happiness index is 4.05. And another thing is that the inflation rate is the 4.50 percentage and GDP is 7 percentage and projected GDP is the 7.2 percentage. So that is the very brief about the Indian economy. Now come to the monetary policy. Now what is monetary policy? Monetary policy means that is the policy of the Reserve Bank or commercial bank which basically control the money supply. But it also helps the savings investment policy, export import policies, employment generations. But basically we consider the how to control the money supply here. That is with the help of monetary policy, how the banking sector control the money supply. So there is the two methods. One method is the quantitative methods and another one is the qualitative methods. So first quantitative method is the bank rate policy. So what is bank rate? Bank rate means that is the when the any general people asking the loan from the commercial bank, the Reserve Bank fix a certain rate of interest. Of course, the exchange the first class bill of exchange or the government security, and right now the bank rate is the 6.75 percentage. After that, any commercial bank asks the loan from the Reserve Bank also fix a certain rate of interest. So that is called the repo rate. Right now the repo rate is the 6.50. And on the other hand, if any commercial bank deposit the certain money to the central bank, so commercial bank also get the certain rate of interest, that is called the reverse repo. So right now reverse repo is the 3.35. Next is the open market operation. So that controls the inflation. Basically, when the inflation is increasing, government try to squeeze the money supply. In that situation, government are that is the banking sectors are selling the government first class bill so that the money is channelized from people hand to bank. And on the other hand, if the government want to increase the money supply, in the situation, the bank try to purchase the government security so that money is channelized from banking sector to public hand. After that, the cash reserve ratio or the variable reserve ratio. Right now, the right now the bank fixed the cash reserve ratio. It is the 4.50 percentage. So these are the quantitative policy. After that, we comes to the qualitative policies. So first policy is the credit margin. Credit margin means that is the bank always asking the certain mortgage for the any kind of the collateral lending or borrowing or loan. After that, next one is the moral suasions. The government asks the bank to keep the certain amount of the money for the financial standing of the country. And next one is the selective credit control. So sometimes the RBI give the directions of the commercial bank just to leverage the credit policy so that the any industry can open up and can run. So in this way, the our monetary policy is carried on. Now we discuss about our fourth largest bank, that is about the Canara Bank. So you can see the first symbol of the Canara Bank. There is a two clip, and what is the tagline there? The tagline is the "Together we can work." It's very good. After that, I'm telling about the history of the Canara Bank. Canara Bank was established in the 1906. And after that, we know that in 1969, the central government go for the banking sector nationalization policy. So 14 private bank become the nationalized bank. So among them, the Canara Bank was one of them. And again in the 1980, the six bank are included as a nationalized bank. So after that, the banking policy is going on. In 1991, we know that there is a LPG model started. Liberalization, privatization, globalization model started, and there is a several reforms of the banking sectors. And in 1988, the SEBI was also established. So after that, the banking sector running smooth. But in 2014, we know that there's a huge changes in the banking policy as well as in our currency policies. Basically, we can say the currencies policies, the government asks for the demonetization. Next, the government observed that there's a burden of the banking sectors. That is basically it is the non-performing asset. So to reduce this burden or to reduce the non-performing asset and to reduce the administrative cost, bank or central government asks for the merger of the all public sector banks. And after that, the 21 bank comes to the 12th bank as a leading bank. So among them, the Canara Bank was the fourth leading bank, and it was merged with the Syndicate Bank, and they started operation the 1st April 2020. Right now, we can consider the positions of the Canara Bank. So right now, its revenue is the 14 lakh crore, and it's at the branch more than 9,000, and number of ATM is the more than the 13,000. And if you come to the product of the Canara Bank, so that is the first is the retail banking, corporate banking, private banking, and as well as the mm, also giving the loan facilities. And it is also have the wealth management, asset management, investment management, and the risk management policies. And of course, the Canara Bank also going for the mutual fund and as well as the exchange traded fund. And that's two funds also known as the index fund. So these are the basically product of the Canara Bank. Now, Canara Bank also maintain the good CASA ratio. The CASA ratio means that is the current account divided by savings account ratio. And the CASA ratio is the 32.02 percentage. And of course maintain the SLR that is also selected by the RBI, the 18 percentage. And rather than the capital asset ratio, that is also good enough, the 16.92 percentage. So we can say the Canara Bank have a big role for the development of our country. Now, how banking sectors are involved with the different types of the central government policies. First, we come to the housing sectors, and we know that the central government introduced the Pradhan Mantri Abasan Yojana, and under this scheme, the banking sectors are involved, and of course, the general peoples are getting the fund from the banking sectors. So because the here the banking sectors act as a agent of the both government and as well as the general people. And if you come to the health sectors, we can see the Ayushman Bharat. and more than 5 crore people enlisted their name the Ayushman Bharat, and they are getting the health facility up to 5 lakhs, and most of the hospitals they are accepting this type of the card. Now come to the educational part. The government announced the Vidya Lakshmi, and in their situations the bank also cooperate with the central bank, and some of the state like West Bengal they are also using the student credit card, and in that situation the banking sectors are also involved. And if we come to the self reliance or Bikashita Bharat, that is the one expected policies 2047. So in that situations, uh, central government already declared the NSDC, National Skill Development Corporations, and along with the different small business. That is the introducing the Mudra loan, and banking sectors are work properly under this Mudra loan. And there is a three categories. The first category is the Sishu, next is the Kishore, next is the Toru. Under this Sishu, the any people can get the loan up to 50K. And if you come to the Kishore, so 50K to the 5 lakhs, and Torun 5 lakh to 25 lakhs, or sometimes there is no binding, that depends on the your project. So that is the one side, and other side is the small, medium enterprises. That is the MSME scheme. The government also give the facility, and banking sectors also providing the loan for development of the micro, small, medium scale industry. And if we come to the agricultural sectors, so government introduced the Kisan credit card, so that in that situation the banking sectors are involved. So in the every aspect of the development, banking sectors are involved. So we cannot ignore the role of the banking sectors for any developed or developing country. Rather, we can say the banking is the spinal cord of the any developing country or developed country or any developed nation. So as per the Indian economy also taken the different types of the fiscal policies. We know that the fiscal policy is the policy of the government which deals with the public debt, public expenditure, and taxation policies. So, in the one side, the fiscal policy, other side is the monetary policies. So, this is the best combinations of the fiscal policy and monetary policy which can develop the Indian economy. And we can expect that we can see the Bikashito Bharat in the 2047. And in this Vikashita Bharat, the banking sectors must have a big role. So in my next session, I'll discuss so what is the advantage and disadvantage about the merging of the banking policy. But no doubt, after merging, we can say that the administration cost is reducing, number of customers is increasing, and the administration process becoming just more smooth. So we cannot ignore this part, but later we will discuss the firstly. So what is the main advantage or disadvantage of the this marching policy? So thank you for the today. All the best.